Here's why the bank is the largest redeemer of tax lien certificates is because if the tax lien certificate forecloses, it wipes out any mortgages or encumbrances on that property because the property tax is always the first person to record a lien on a property. So therefore, he who records first gets to foreclose and wipe out above. So if you have the taxes and then you have a mortgage, and what's going to happen, the property taxes aren't being paid, they start to foreclose, the bank comes in and pays that property tax so that they don't get wiped out and lose their mortgage basically. So there's a lot of funny things here in that regard. A, that the bank is taking your money and investing in tax liens. However, the banks also are what make this tax lien safe and secure and predictable. But the worst case scenario in a tax lien is the best case for you because say you buy 100 tax lien certificates for $1,000 each, you're going to end up with interest on 95 of those properties. And then you're going to be able to foreclose on 5 of those properties and end up with 5 houses. So theoretically, and obviously 1,000 is a nice round number, but there's plenty of those liens out there at that price. So if you go, say you buy 100 at $1,000, your 100 grand, say they're on $100,000 properties, it's possible to turn that 100 grand into 400 or 500 over a couple years just by foreclosing on the tax liens that don't redeem. So that's why the worst case is the best case scenario for you. And that's why I love this business. The big problem is when you're getting started, it's confusing. You kind of go down the rabbit hole of YouTube. And the good and the bad about tax liens is the fact that when you're starting, it's just so hard to find information because every county is a little bit different, right? So the easiest thing to keep in mind as a beginner is half the states are lien, half the states are deed. All right. So keep that in mind as you're going through this business. So it begs the question coming back of like, why even put your money in the bank? Just put it into tax liens to begin with. That way your money is getting interest rate on an asset that's probably appreciating in value. Now, worst case scenario, I guess, would be if you buy a tax lien certificate at the certificate sale. And from there, maybe the house burns down or it needs to be torn down. Now, this is very rare, maybe 1 in a couple thousand, but it would also come down to you having not done proper research on your tax lien.